Good afternoon, and thank you for joining us for our 2026 Nonprofit Accounting and Tax Update. This year's theme is Scaling in Times of Uncertainty. Nonprofit organizations today are navigating a complex environment marked by funding pressures, workforce challenges, evolving regulations, increasing demand for services, and rapid advances in technology. When we talk about scaling, we're not talking only about growth. We're talking about building the capacity, flexibility, and resilience organizations need to fulfill their missions in an environment that continues to change. And our goal today is to keep the conversation practical and actionable. We'll cover key accounting and tax developments affecting nonprofits. We'll discuss strategies for scaling finance and operational teams, explore practical applications of AI, and share approaches to scenario planning that can help organizations make better decisions amid uncertainty. We've structured today's session in short, focused segments to keep the discussion moving. Please submit questions throughout the webinar using the Zoom Q&A feature, and a member of our team will follow up afterward. With that, let's get started with our tax update. Oh, but before that, we have a polling question, and if you want CPE, please make sure that you respond to the 3 polling questions that will pop up during the course of the webinar.
Okay, great. Good afternoon, everyone. Thank you for the intro. Oh, Daniela, thank you. In terms of we're starting off with the tax update to keep it lively in the beginning of the session. And today, Donella, if you could, there we go. For the tax update, you'll notice I'm not starting with the One Big Beautiful Bill. I feel like that was touched on extensively last year as regulations came out. I know there were various advisors and organizations putting out content. We issued an alert in regards to the impact on charitable giving and donations and communicated that with our clients. So hopefully by now you are all aware of those charitable deductions, the limitations, as well as those above the line charitable deductions of $1,000 and $2,000, and are also taking advantage of that and are communicating with your donor base. I know several advisors out there have good templates on communication, as well as we do. If that's something that's of interest, always feel free to reach out, add a comment in the comment session. We're more than happy to connect and provide whatever resource we have available. What I did want to start off with is on the Form 990. The Treasury did announce recently, end of April, that they are looking to revise the Form 990. And as you may all recall, if you've been in the nonprofit industry for quite some time, there was a full-blown 990 revision several years ago, 10 plus years ago, where the full 990 was revised with additional schedules and disclosures. And so now the IRS is focusing to add additional disclosures, which means the 990 will be getting longer, potentially. Some areas that they are looking to focus on are if a nonprofit receives government grants and contracts, there may be additional disclosures around that. Currently, there's a specific question on the 990 asking whether the organization undergoes a single audit. So that's already part of the 990 if you are receiving government funding. So there may adding additional questions, additional disclosures. Did they have any findings in your single audit? I don't know how deep they're going to go in terms of that, but something to keep an eye out. And in reality, these changes won't come into play for a couple of years. The IRS normally does allow commenting when they do issue any revisions. And so if you do see something, always feel free to comment on how that's going to impact your organization. Because another area they are looking to focus on is fiscal sponsorship arrangements. So there are several public charities out there that are fiscal sponsors. So they are undertaking a project or maybe a startup organization that doesn't fully have its exempt purpose. And this has been more in the news just because sometimes a fiscal sponsor has an organization and maybe they were in a protest, and does that get attributed to the organization that's sponsoring them? So I think they're just trying to get more information on how current fiscal sponsorship arrangements are working, and that will then cause additional disclosures on the 990. They're also looking for, again, on the public funding, how those funds are being used. So something to keep an eye on. Moving on, I'll touch on the IRS Priority Guidance Plan. The IRS issues on an annual basis focus areas that they're going to look into in the coming fiscal year. These are specifically for tax-exempt organizations. They issue it for for-profit entities as well. But some areas of focus are around donor advised funds. There were proposed regulations that were issued not that long ago, and there were several comments and feedback around these proposed regulations. The IRS is still intending to issue final regulations. Hopefully, all of that feedback around the DAF comes into play. But interestingly enough, in the priority guidance plan, they did remove the focus area around public support clarification. As you know, if you do receive funding from a DAF, it counts towards your public support because it's coming from another public charity. And there was guidance that was supposed to come out from the IRS on how to treat that in your public support test. Would it make an impact if it's just coming from, the same individual that founded the organization? But they did remove that from their guidance plan. There is also additional guidance around excess compensation. This is for organizations that are paying individuals more than $1 million in compensation. They did expand it where in the past it was your top 5 individuals. So now they've made it broader. It's any individual that is paid over that $1 million. And they are, again, looking to issue guidance around, again, who should be picked up, who should you report it, is it coming from a related organization? They have also stated that they are going to issue guidance around political activity and exempt organizations. And the reason being, last year, the IRS came out with a position around communication in houses of worship, where maybe the congregation during a religious service maybe is referencing some type of political figure or campaign. And they deemed that it was not political activity. So I think they are trying to issue some guidance around, when can nonprofits maybe speak to some of this, and does it fall within the Johnson Amendment, or is it outside of that? There is also guidance around public disclosure and compliance requirements for nonprofits. As a nonprofit, you are required to make your 990 available to the public, as well as your determination letter. So they're just going to provide guidance whether, is it sufficient to just post it on your website, and how are you supposed to make some of these things available to the public? Moving on to the next topic, we'll focus on scholarship granting organizations. This is another item that came out of the One Big Beautiful Bill, but there's just more information around it. This is in reference to 501c3 public charities that would be providing scholarships to K through 12 students for qualified educational expenses. And I think there's some misconception currently that a lot of people are thinking it's just for tuition and it's just going to benefit private schools for these scholarship granting organizations. But ideally, it's for any qualifying educational expenses, which does include books, supplies, computer technology, equipment. So ideally, I know we have a lot of K through 12 educational charter schools, or just other organizations that have these K through 12 schooling. And through a supporting organization, you would be able to provide that financial support to some of these individuals that may need that technology and books and other supplies for school. So that it may be a great way to provide assistance. And these scholarship organizations are only able to provide this type of assistance to low-income individuals. They have to be within a certain medium. There's also going to be regulation around the organization itself. At least 90% of the funds they receive needs to be paid out through scholarships. And the reason this is important is these scholarship granting organizations are going to get an even more beneficial charitable deduction. Individuals that donate into these organizations are going to be able to take a tax credit of $1,700, which is not just your itemized charitable deduction that just lowers your income that's subject to tax. This will actually reduce the overall tax paid by individuals. So it's actually a little bit more beneficial for individuals to donate to these types of organizations because that tax benefit is a little bit greater. These these scholarship granting organizations, the state does need to opt in. So both federal and state need to be approved. As of now, California has not opted in to these scholarship granting organizations. So hopefully they will. And if that is the case, maybe we're going to see a surge of these types of organizations created to then support some of these K through 12 schools and support some of these students. So I think it is going to be a great way to get some of that money and funding out to needy families in the community. The next one is around opportunity zone credits. And the reason I'm bringing this up is because there is going to be a period in the coming months where organizations are going to be able to really vouch or they're going to rezone some areas. And that way you could reach out and make sure that your community is included in these opportunity zone credits. And the reason why you would want your community or your organization to really have those areas under the opportunity zone credits because it provides additional funding for that community. So there's tax incentives for individuals to fund these areas, and it could be through community revitalization partnerships, affordable housing. So there's different things that incentivize individuals to go ahead and give money and invest in these communities. So if you're already serving a population where it is a low income community, and it's not part of this opportunity zone incentive, then there may be some dollars or funding that is being missed. So they are opening it so that way they could get feedback of what areas should be part of that. And if you are serving in a community in that area, please just reach out, just educate yourself a little bit more about it and see if your community does qualify for that. That's all in terms of the tax update. I'm going to go ahead and turn it over to Yulia to go through the accounting and audit update.
Thank you, Liz. And I see a few questions came in on the polling questions. Yes, please answer the polling questions if you want the CPE credit. And yes, this deck and the recording will be available after the webinar is completed. All right, so we will now move into the accounting standards and compliance update, a very exciting topic. Thankfully, there's not a lot of activity on the accounting standards front that is relevant to nonprofits. So there's not a lot to cover here, but we did want to highlight a few things. So we will start with the accounting standards update 2025-06 internal use software, because this one we feel is most broadly relevant to a lot of nonprofits. A lot of you are implementing new systems, whether it's ERP systems, grants management software, donor database, or even updating your websites. And so the standard is effective for fiscal years beginning after December 15, 2027, with early implementation permitted. However, it's worth to start paying attention to it now because these projects, as we know, they take a long time. And also the new standard better reflects how software development is actually done. So you might recall that the old standard referenced distinct project stages such as application development stage, there was a preliminary stage, post-implementation stage. And if you've ever implemented software, you know that that's not at all how that is done. A lot of times the software is developed in sprints where certain parts of it are designed, coded, tested, and put in place. And it is done over and over. And then the invoices that you receive only reflect hours worked. So it's very hard to determine actually which stage you're in. So what the new standard does is it allows you to start capitalizing those implementation costs as soon as management approves the new software, commits to funding it, and the project is reasonably probable of being completed. Now, certain costs continue to be expensed, such as your data conversion, training, troubleshooting costs, they continue to be expensed, as well as hosting and subscription fees continue to be expensed as well. So the quick takeaway here is if you are in the process of implementing a new software, don't wait until audit time to decide what you're capitalizing versus what you're expensing. Start that tracking now. On the next slide, we have a few other standards that may or may not be relevant to you, so I'll just cover them very quickly. The first one is on crypto assets, and it's effective now, and the accounting change here is that they're now carried at fair value. Where this may be applicable is not only when you hold those assets, but when a donor contributes to you using crypto assets, and then you don't liquidate them as soon as they come in. So the accounting here matters, but what's more important, I think, is for nonprofits to have an updated gift acceptance policy that really outlines, do you accept those crypto donations? And if you do, how quickly you liquidate them. The next standard is on income tax disclosures. Those will be expanded. That may not be relevant for a lot of nonprofits, but don't discard it just yet. If you have a significant unrelated business income, if you have foreign subsidiaries, taxable, subsidiaries that may be relevant to you, and you may need to put in new disclosures. And then the last one here is the environmental credit standard that has recently been issued. And this one is relevant if you have renewable energy credits, solar or energy efficient projects, and it will provide for a consistent accounting for those items. And so the takeaway here is it's not yet effective. It's going to take a few years, but start your inventory of those programs now if you participate in them, so you're all ready to go when it does come effective. All right. And on this next slide here, a special word on donor advised funds. This one is my favorite because I think that one has, we received so many questions on this one. Liz covered the tax considerations on the donor advised funds, and my focus here is on revenue recognition. So just as a reminder, I'm sure all of you have seen a gift come through from a donor advised fund in the recent year or so, because that giving has really accelerated. A lot of individuals are using donor advised funds because it's become so accessible. The issue is when the donor creates a donor advised fund and contributes funds into it, they lose legal control over those funds. And then the DAF now is the one that carries that legal control. So when you receive a letter from a donor that says something like, I intend to recommend a gift from my donor advised fund, that is not when you record that revenue. You record it when you actually get that grant approved by the donor advised fund. So a little tricky here. All right, so those were the accounting updates. And on the next slide, we'll talk about the uniform guidance. So the next couple slides here will be most relevant to organizations with federal funding. Back in April 2024, the Office of Management and Budget released the most significant overhaul to uniform guidance since 2013. And there were a lot of changes, but I'll only cover a couple here that are most important, I think. So firstly, the single audit threshold was increased to 1 million. That is effective for fiscal year ending September 30, 2025 onwards. So most of nonprofits are now under this new threshold. Compliance requirements still apply even if you're not subject to a single audit. So still continue tracking those, but you may not need a single audit now. And the key here is really identify the funding sources of the funds that you receive, because a lot of times when that funding comes through a pass-through entity like a city, a county, or even another nonprofit, a lot of times they themselves don't know until after year-end what really that federal versus non-federal split is. And so as a result, you may not receive that information until very late in the game as well. So absolutely try to get even estimated information as early as possible to make sure you understand what you need to comply with. The second piece here on the slide is the indirect cost rate. So the minimum indirect cost rate was increased to up to 15%. Now, if you do have a federally negotiated indirect cost rate, that rate still trumps everything, and you still have to follow that. And then pass-through entities must accept all MICRAs as well. And because the last point I'll make here, because there were so many changes, it's really important to keep a good tracking of all your awards. If you have an award that has been executed prior to October 1, 2024, it will still be under the old guidance. unless it's been amended and that amendment explicitly references the new uniform guidance. If you have a newer award that has been issued after October 1, 2024, that is under the new guidance. That's easy. But it's really important. Don't just assume that now that we're in 2026, the new guidance applies. Pay attention to when your award agreement was dated. And then the last slide, this is just hot off the press, and I won't spend a lot of time here because these changes were just proposed in the uniform guidance, came out a week or 2 weeks ago, and they're not yet effective. They're just proposed. But why we're sharing them here is because it's to reflect the current kind of mood of the policies, current direction of the policies. Some of the changes that are going to be implemented really reflect that agencies would have broader termination and suspension rights over their awards. The award selection would be tied more clearly to their priorities, national interest priorities. And there are also proposed restrictions around certain activities and costs, including DEI programs. So if you do receive federal funding, you should watch this one closely once it gets implemented. And we're all done now that everyone is sufficiently updated on the exciting happenings in the world of accounting standards and compliance. We will move into our first panel, which is going to be on scaling staffing. And hopefully this topic will be very practical to you all, because what we commonly see is that organizations grow, but operations and infrastructure do not keep up. And then you may have more programs, more funding, more requirements, but then behind the scenes, it's just the same 2 or 3 people that do everything. And so what you start seeing then is things slip through the cracks, the close takes longer, compliance gets missed, and a lot of pressure comes into the nonprofit. People are stretched too thin. And so that's why we wanted to have this conversation. And we have a great group here, subject matter experts that I'll give a brief introduction to. So firstly, it's Arne Erazo. Arne leads our client accounting and advisory services practice. And so she works with organizations on outsourced finance and accounting solutions. And she sees firsthand what happens when the finance function needs to scale, but the organization is not yet ready to build a full internal team overnight. Second is Derek Coleman. He leads our search and staffing practice, and his team helps organizations find finance and accounting talent, whether it's temporary or permanent. So he brings here the talent market and staffing strategy perspective. And Lisbeth needs no introduction, but her board governance experience is really relevant here. Liz currently serves on 2 boards, Mexican American Opportunity Foundation and Neighborhood Legal Services of Los Angeles County. And so she sees how the challenges firsthand of when organizations grow, and how does the board react? How does the board think about those staffing decisions? So we'll start with the first question, and Arne, we'll start with you. When a nonprofit grows, where do you most often see the staffing model fail to keep up?
Yeah, thank you for having me, Yulia. And that's a great question. You kind of alluded to that earlier, right? Where what I've seen is when the organization growth outpaces kind of some of the support functions, right? Whether it's a HR functionality, the technology team, the finance team, it's just not keeping up with the top line revenue growth of the organization, right? And something I've also noticed is that early on, say in a startup phase of a nonprofit, the norm is for everyone to wear a lot of hats. It's all hands on deck moment, right? Because we're trying to grow the organization, and that's what makes things successful at that stage of the growth. But oftentimes when your top line revenue grows really quickly, that model is just not sustainable, right? There's certain risk that comes with that. And Yulia, you mentioned it earlier, where all of the knowledge really just sits with one individual, 1 or 2 individual, and it just gets concentrated. Something that works when you're a $2 million nonprofit is not going to work when you're a $20 million nonprofit. And it's something to be aware of, right? And on the other side of it, it's not only that your top line revenue is growing, you have pressures on, your reporting, right? You have more reporting requirements, more compliance requirements, more stakeholders, larger budget. So again, something to think about when you see some of those trigger points. It's time to think about, okay, maybe this is our structure needs to change, right? And it's hard to find good people. It's hard to find people with the expertise that you need for your growing organization. And that's where we've come in quite a few times with supporting nonprofits from an outsourced accounting perspective, where we can add value given on where you are in your revenue cycle, right? The growth, whether it's coming in as a transactional support or more high-end support. It really does add a lot of value because you're able to work with a firm, and that risk of the knowledge being concentrated with one person is kind of mitigated, right? You have kind of a larger support team. So really at the end of the day, I would say that organizations that really want to make investments in an infrastructure and not look at it as an overhead cost, but truly as an investment in the future, are the ones that are set up to scale and grow and continue on that amazing trajectory.
Thank you, Aaron. And that's very true. Sometimes, a lot of times, our nonprofits have that pressure to keep the infrastructure cost so low because that's what the funders expect, that's what the donors expect, but that may not be the right solution, especially in time of growth. And Liz, from the governance perspective, what do you see?
Yeah, no, I think, as I said on boards, I think we've gone through this in the past where all of a sudden we received a very large grant from a funder or we got a new government funding. And with that, like it was mentioned, it comes additional compliance, additional reporting requirements for that specific grant. And when we start to see issues is, I'm normally in the finance committee, when the finance committee starts to get a lot of the reports late, so they're closing, but we're looking at information that's 3 months behind. So we're not looking at, timely information. It's outdated at this point because the staff isn't able to keep up with all of the closing and the compliance, grant reporting requirements. That's all very demanding. And so when we start seeing that lag, we know, okay, there's something happening. There's an issue. We need to figure out what it is. In order to address that, whether it's on internal tracking, controls, whatever it is. And then when you have the same staff just take on these additional responsibilities, then it leads to burnout. So then you have employees that are working tons of hours, they're not able to hold all of those increasing responsibilities together, and start thinking about those specialized resources that Arna mentioned, or, bringing in more talent into the organization. Or I have also seen it where we have grown, but the staff we have is long tenured staff that has been for 20 plus years, and their technical skills maybe aren't there where they should be for these complexity and requirements of these additional funding. So how are we, again, continuing to invest in our staff to make sure they're also knowledgeable and able to keep up with these requirements? So as you grow as an organization, is looking at the infrastructure as a whole, the staffing, the systems, and the training of the folks you have in there.
Yeah, absolutely. Very true. And that's actually a good setup for our next question. Because when an organization scales and grows and then you have all these issues, sometimes leadership pivots to, oh, we need to hire somebody, we need to bring somebody in. But that may not be the right solution. And Derek, that's where I want to hear from you. How should leaders think about whether to hire somebody permanently, or maybe it's temporary, or maybe bring outsourced or fractional support?
The first question I always ask a nonprofit leader is, what is the actual problem you're trying to solve for? And how fast do you need to solve it? Because a full-time hire takes time, somewhere between now, 60 to 90 days from the launch of the search to getting someone in the seat. And that's assuming if the process goes smoothly. And if you have a gap today, then that timeline would be a problem. And so interim and temp staffing exists to solve the urgent version of the problem. You get someone in the seat quickly, the work gets done, and you buy yourself a little bit more time and space to make a deliberate long-term decision rather than a panicked one. And we see that often where it's a panic. So organization decides, well, this is what we need because this is what we've had in the past. So I've noticed costly mistakes from bad hires, just keeping it going forward. This is what we've always done. So I think sometimes in the interim situation, you have an opportunity to give yourself some space to scope the right role and tackle the problem that exists currently. The other thing I'd add is that sometimes an interim engagement will tell you something that you haven't discovered before. You get an interim person in there, and then you're like, oh, they're 90 days in, like there's different skills that we may need on a full-time basis than we need on a temporary resource basis. So I think give yourself time and space to actually scope out the role and don't operate in this quickly panic situation. And that'll be valuable before you commit to a salary, benefits, and a long-term headcount. So the decision framework I'd offer is the need immediate? Use an interim resource to stabilize. If the need is structural and long-term, build towards a permanent hire, but don't let the urgency force that decision before you're ready.
It's very true, Derek. Don't be driven by fear. That's the thing. Arna, from the outsourced accounting side, how do you think about that question? What should be external, internal, or how does the organization know what it actually means?
Yeah, sure. It's, Derek, did a great job kind of sharing about the interim solutions, right? And something I think about a lot when an organization encounters this is the quick question is to say, we need to hire, like you said, Julia, right? Like get someone in the door now. And I would ask the leaders to think about the question instead of what expertise do we need? Where is the gap? What problem are we trying to solve, like Derek mentioned? And so really when I think about that question, three things come to mind for me. The first one being understanding complexity, right? What is the problem that you're trying to solve around complex financial reporting? Is it grant compliance? Is there cash flow planning that you need? Are you about to go through an audit where you need to have some audit readiness done? So if it's more of the high complex problem that you're trying to solve, you probably need more of a higher level expertise and higher level resource, right? And then the question becomes, do you need that resource 40 hours a week, every week? Do you need that resource 2 hours a week for certain concentrated weeks? Do you need them only at quarter end? Do you need them? So that's the complexity question I would encourage leaders to ask. The second one being capacity, right? Oftentimes it's more of a bandwidth issue where you may have the skill sets in-house, but they just don't have the bandwidth to scale with the growth that you're seeing. So then that's where kind of outsourced accounting really comes in as a solution and of a value add to where it's a bandwidth issue. A lot of times the team can come in and support from a transactional level support, whether it's processing payment, and maybe that's your squeeze, that's the need. But oftentimes also we come in as a controller or as a CFO and really support that high level expertise need that we talked about before. And the final piece I would say is kind of the permanence of the role, right? Is it, again, back to the first question of, are you at a point in your organization where you're willing to invest long term? Are you setting up this role that's scalable, right? What is the long-term vision of the role? And if it's a long-term vision, absolutely make the rec needed to be able to hire that person. But oftentimes it may not be a long-term role. It may be what you're feeling at the moment. At that time, outsourced accounting, interim solution is something that, is of a lot of value. Usually not because you're just getting one person, you're getting a firm. So I often see that the correct answer really isn't one or the other. It truly is a combination, depending on where you are in the life cycle of your organization. It truly is a combination. So I would say it's not choosing between one or the other model. It's kind of one size fits one approach, right? But knowing that these are the available solutions out there, thinking through troubleshooting what you need now, is something that I think, us as a firm can offer.
That's very true. I think the goal is really building the right finance team for the right operational stage and stage of complexity.
Exactly.
Yeah. And Liz, what thoughts do you have on the governance side?
Yeah, no, I think looking at the funding stream too, if you are getting new grants, is it going to be a sustainable funding source that would then need that permanent hire, or is it just kind of a quick short-term grant that is just for that specific period and you're not going to have a renewal? So that would also help you decide, which way you want to lean towards, as well as looking at compensation, when you're hiring out there, are you, being competitive in the compensation you're offering, and maybe you don't, your grant or funding is not going to allow you to have that competitive compensation to bring somebody fully in-house. And maybe that's where you start exploring your other options, or you do have enough within the budget where you're able to go out there and hire and recruit, talent that you want within the house. So again, looking at all of those variables to determine and help you make that decision.
Yeah, absolutely. So I want to pivot this a little bit to the staffing risk. So a lot of organizations don't even realize they have that exposure until someone either retires or resigns and gives a 2-week notice, or just has to go on leave. And then, and at that time, as Derek mentioned, then there's like this uncertainty. There's a time of crisis, and how do we counteract that? So Liz, from the board perspective, what should organizations do now to before that transition becomes urgent?
Yeah, no, and I think it's, identifying key persons. I think Arna touched on that, and maybe Derek as well, as, what are their roles? What is their institutional knowledge? What processes are they managing? Making sure you are cross-training individuals so that knowledge is not just relying with that same individual. Do you have any succession planning for your top management individuals? Is that something that you've talked about as a board or in your strategic plan, and making sure that you are investing in your people and professional development? That is very important to make sure that, again, they keep the skills needed for the organization as it grows.
Thank you. And Derek, what would you add to that?
From a staffing standpoint, the organizations that we see that struggle the most during transitions are the ones where the institutional knowledge lives in one person, and they don't realize it until that person's gone. So the practical things that we think and suggest boards and executives do is to document who owns what, and not just titles, but actual functions, and who closes the books, who manages the audit relationship, who knows where the grant reporting lives. If the answer is to any one of those specific ones is that there's no backup, then there's a risk. The second piece is giving yourself runway when there's an upcoming retirement or a leave. These things take time. So like give yourself proper time to plan and not wait until you're panicked to make a quick decision. So that lead time is what separates smooth transition from an emergency from my perspective.
Well said. All right. Well, this is a great place to end. The takeaway is that staffing capacity is not really an HR only issue, but that it is governance, compliance, financial reporting, and even a sustainability issue. Thank you so much, Arna, Derek, and Liz, for sharing your thoughts with us. And we will now move into our second panel that will be led by Danila.
Thanks, Julia. Yes, well, we promised it was going to be fast-paced, so we are moving right into it, to one of the most talked about topics in the nonprofit sector. And for many organizations, the challenge isn't really understanding what AI is, it's understanding where to start and how to use it responsibly. And so rather than focusing on the technology itself, we wanted to talk about practical lessons learned from organizations that are actively experimenting today. And that includes the Natural History Museum of Los Angeles County. And so super excited to have Stephen joining us today. And so, Stephen, I'm going to pose the first question to you. When organizations think about AI, many jump straight to the tools, actually not dissimilar to what Derek just shared when it comes to staffing. But what should organizations be thinking about first when it comes to AI?
Yeah, thank you very much, Danila, and thank you for having me here today. I really like how you phrase the question. What should they be thinking about first? So that really is the first step. We can't just rush into deploying these amazing tools. They're doing a better and better job of marketing themselves as to what kind of impact and potential that they have, but it becomes very difficult when we try to jump into it. So, what I have seen in my experience is that AI is really most valuable when solving specific problems rather than trying to build this kind of all-encompassing, all-knowing tool that knows your entire business top to bottom. So I see this as a micro approach versus a macro approach. So if we can do these little bite-sized projects and efforts and get these little wins, we start to gain momentum. And I break that down into a couple of different areas. So, number one, when we have good data, then we can leverage that data in a very real way. So, data quality is definitely of the highest regard here. And my team has, we were very fortunate in the fact that as these tools were coming out, we had already embarked on a data quality initiative from the accounting and finance team. So an example of this is I've kind of distilled the thinking when it comes to data quality, particularly on the finance and accounting side, is my team is all trained to ask the question, does our ending coding of our chart of accounts of our general ledger string for any transaction represent its reality? Is that transaction easily memorable because we applied all the right codes, whether it's a location or a cost center or a project code or an object code, any of those things, the funding source. If you know anything about that transaction that you're looking for in the past, you should be able to find it because someone right now coded it correctly. So coming up with those real good kind of thought sessions to really think through when we're creating a new code or a new segment in something as powerful as the chart of accounts goes such a long way to the end result or the end tool, something like an AI tool at the end of the day that is then accessing this great information. The AI tool, I really see it as the kind of top layer on top of this pyramid with something like data quality, systems that can actually talk to each other, and a real kind of clear initiative kind of sitting below that. And then when you apply the AI tool on top of all of that, then it becomes extremely powerful and highly leverageable.
I love that pyramid graphic, and I know that resonates well with Colin, who's all about good data with the AI tool really sitting on top of that pyramid. So Colin is a senior manager in our audit and advisory. He straddles both practices, and his passion is data analytics. And so a lot of what you said, Stephen, definitely resonates with Colin. So Colin, my follow-up question to you is, sort of tied in a little bit with the technology piece, is that many nonprofits just feel overwhelmed because the technology is changing so quickly. So how should leaders think about getting started without feeling like they have to have all of the answers?
Thank you, Danella. That is certainly true that people do feel overwhelmed with everything coming out. Seems to be not even daily anymore, just minutes. But I would actually start by saying feeling behind is normal because of that. The technology is moving so quickly that almost everyone feels behind, even people who spend time in it daily. So the goal should not be to have the perfect AI strategy on day one. The goal should be to build the organization's ability to learn, test, and adapt. And this relates to a mindset shift that's really important. AI has a much shorter retry or innovation cycle than most technologies that we're used to. So if something didn't work 6 weeks ago, try it again. If something didn't work 6 days ago, try it again. It's moving that quickly. But however, that does not mean that nonprofits should chase every new model, every new product announcement. That can become a distraction. And in fact, I think leaders should do the opposite. They should keep a short list of real operational problems and come back to them regularly. And some questions that you could ask are, where are people recreating the same analysis or narrative over and over again? To Stephen's point, what is the quality and the confidence in our data before applying that layer of AI? Where are teams stuck because information is spread across emails, spreadsheets, meeting notes, different systems? From here, teams can get started with low risk, high friction use cases such as drafting first version of a board memo or comparing budget scenarios. But it's really important to note that these are not places where AI replaces judgment. They're places where AI give people a better starting point and they can start to hone their skills with the available tools. But that main durable skill with respect to AI is not knowing which model is the best this month, The skill is learning how to frame a problem, provide that context, prompt the better questions, and then challenge and validate the results. That's really where AI literacy really comes into play.
Yeah, I feel like we have to underscore that because I remember in a conversation with Stephen and a few other CFOs around AI, just that concept. I think, Stephen, you used the analogy of the horse race with the different tools, one getting ahead, the other falling behind, and then, the reverse happens. But really bringing it back, and I also appreciated what you said, Colin, and Stephen too, is it starts small so that people can develop that comfort level with the tool and build that trust, and really making sure we're learning how to frame the problems, ask good questions, understanding what we're trying to solve. So Stephen, one of the concerns that we hear most often is around privacy, governance, and responsible AI use. So what guardrails should organizations put in place before encouraging widespread adoption?
Yeah, that's a great question, and that absolutely comes up in every conversation that I've had with AI. The first thing that I would say is knowing the difference with the tools and where your data is going. So enterprise licensing is going to be the number one thing that needs to be put in place right away. This is probably your lowest hanging fruit. The last thing that you want is a number of your employees using either personal, even if they're paid accounts, or free accounts. That's really the worst kind of scenario, is using a free account and taking company information, organizational information, and putting it in there. Because as I went to one of these providers' workshops, they did answer this question about security and data privacy. And the way that they explained it back to me was, with an enterprise license, you're taking the model of the tool that you're using and it's coming into your environment and it's operating within the environment, not sending information back to the cloud or to learn from. When you're using a free model, it sits in the cloud in a public area, or at least it's shareable and viewable with that company, and you're taking your data to that open space. So it's now unprotected, and now the model can learn from it, and then it may show up in others' results later. So understanding that distinction is really key. And I would just highly suggest, I know it's difficult, but assign that terms and conditions reading to somebody, because you really do have to look at that, because they are changing them all the time. And they will state how your data is being used. And that has to be a company decision as to which that should weigh in as you're choosing which enterprise license tool to be either your primary or to be your first or second tool that you're using. We talk about those three big models. The next thing to do is to come up with a safe use policy, and enterprise licensing might be the number one thing on that safe use policy. But I highly encourage this policy document not to try to be perfect. It's more of a living document that is getting updated along with these changes. As Colin said, we're going to try something, and if it didn't work, we're going to do it again. So this is a great opportunity for those in a governance position to identify steering committees, kind of guidance committees that are assigned to looking at this on a periodic basis, and to get feedback on a periodic basis to make sure that those safe use policies and good use policies for all the tools are put in place. Obviously the other key point there is really identifying what data is available to be used with which tool. So some data that we're using for financial tools are actually locally run versus run in the cloud. So even though we have an enterprise license, we're looking at how do we make it even more secure to make sure that it's running locally on maybe my machine and not someone else's. So that way, once again, it's just that added layer of security and comfort at the end of the day. And once you take those kind of three points up front, then you start diving into the approved tools only. And at first, this seems like kind of a handcuff just because there's so many tools coming out. But if you deploy this right, and you have maybe like what we've done is on our intranet is approved tools are posted in there. However, we know exactly who to go to if there's a tool that we want to use, and we can give a justification case And those with a better technological understanding and skill level can then assess it for our use case. And because I might be looking at it just from my perspective, but they see, oh, you're tapping into this data that then affects other areas in the organization. So you want to let everyone know that we're going to do approved tools only, but you have this outlet as to who to talk to get something if it does work. In the absence of that, what people are going to do is they're going to try to go around the system. They might be doing these kind of covert applications that, you know, I think we've all been in meetings where we see the Otter AI note taker or the Firefly note taker, and those things seem to spread around like wildfire. I have not heard of any company that is actually deploying those, but I do see them in almost every meeting. And I think the last thing from, you know, I kind of started from the top level of governance and privacy, but from the bottom up view, when it comes to applying governance and safety, you know, again, that seems that there's a big connotation of, okay, you're limiting my work and I'm trying to get some stuff done. And you're going to have these kind of AI champions in your organizations that really understand this stuff maybe better than people at higher levels that have more decision-making power. So I think the thing to really emphasize in this is that curiosity and learning matter more than picking the right tool. So if we can harness whoever has that drive to be curious and to learn continually, then it allows us to build that AI literacy layer and really identify those AI champions throughout the organization. And those will become very, very powerful and key positions that end up inspiring others throughout the organization. And will do a lot of the heavy lifting because they're the ones who are willing to dive into something and see if it worked and try again.
So much great information there, Stephen. Thank you. And to underscore the importance of approved tools only, it might be very well intentioned with the goal of maybe I can create this wonderful PowerPoint in this particular in Claude versus ChatGPT. So it might be well intentioned, but it does open up any organization to data security concerns and issues. And there's so many apps out there as well. So I know we are going over time, but I guess maybe I'll pose one quick question to you, Stephen, and then Colin. If there was just one area that you wanted to tell folk on this webinar, here's something you can do next week, what would it be?
I'll go ahead and go first. I would say number one, the enterprise licenses. This just has to be a tone at the top just set. You know, if your organization is not sure about anything else, at least be preventative and say, we're going to do enterprise licenses only. If you don't already have one identified, then that's probably the first thing to get going on. And then for a practical measure, I would say if you're not already doing this, the best and kind of highest impact immediately is really just turning on a note taker in your meeting systems. I have found this so powerful because it allows me to then engage in the entire conversation. There's a transcript, there's a to-do list, actionable items that you can then assign. It's not always 100% accurate, but it is giving you something to start with. And that really helps out. And it can be applied in multiple other areas. When we were talking about staffing up and these knowledge gaps, I could have a virtual conversation meeting with some of my more senior people talking about a process, have the note taker, and now I've got all of that knowledge or at least a fair representation of that knowledge. Definitely not all the knowledge. We're never going to get there. That would be a very long conversation. Danella, I know you know some people on my team that have been there for quite a while at the museum. But now all of a sudden you have a basis for creating SOPs and having those kind of regular check-ins, and you have this tool that is helping out with documenting it, because that's the number one thing that our teams all say, I don't have time to write it down.
I'm sure many people's ears have picked up there a way of creating more of those narratives and processes to inform policies and procedures, to get that down in writing, because that's the challenge around the institutional knowledge. Colin, any last word from you?
Absolutely. So my practical takeaway would just be create a simple AI prompt repository. It sounds basic, but it's one of the easiest ways to turn that individual experimentation into organizational learning so the whole team can benefit. And it doesn't need to be complicated. You could just have a shared document, and that's even good enough to start because then you'll start to build up a library of these prompts across the functions of the organization. And the main reason that prompt repository matters is that AI output is highly dependent on the quality of the prompt. So if you have a vague prompt, you're going to get a vague answer. And a strong prompt gives that AI a role, the context, the audience, the format, the constraints, examples. And over time, that repository becomes a training and productivity tool. So a simple prompt framework that I like to use is you have your role plus your context, plus your task, your format, and your constraints. So for example, you could say, act as a nonprofit CFO preparing for a board finance committee meeting. Use the following budget scenario assumptions, summarize those key risks, opportunities, and questions for the board to discuss. Format those responses as 5 concise bullets, and don't make any assumptions beyond the information provided. And you will get significantly better output than you would otherwise if it was just a very simple prompt.
Yes, those personas are very important and very helpful. All right, so we only have a few minutes left, Yulia and Liz, for our scenario planning. We might have to turn this into a follow-up podcast, but maybe we'll just pick out a few key takeaways before we end off for today. So, one theme that just came through from our AI discussion was that technology can help organizations move more quickly from information gathering to decision making. But ultimately, leaders still need a framework for making decisions in these times of uncertainty. And so that's where the concept of scenario planning comes in. So Yulia and Liz, maybe I'll pose it to Yulia first. So sometimes when people hear scenario planning, they think, oh, I have to like predict the future. But in reality, it's really about being prepared. And Yulia, how are you advising organizations to think about scenario planning in today's environment?
Yeah, I think a lot of it would be consistent with what we've already shared throughout this hour. Derek spoke about not being driven by fear, and that's exactly how I think about it. Scenario planning is really preempting that decision making in a time of crisis when everything is happening at once, and now leaders have to protect their staff, protect their clients, budget, everything when something happens. But if you sit down and think through several scenarios, and usually we advise to do 3 scenarios. One is a base case scenario, one is a moderate downside scenario, and the last one is significant downside scenario that helps you come up with that framework to make decisions. So when the base scenario is everything stays status quo, it's what you reasonably expect to happen. The moderate downside one is when one key assumption changes. Maybe it's a grant termination. Maybe some major donor is not going to give you the gift that they were promising to give. Maybe operationally a program needs to get terminated. So how do you counteract that? How do you survive that? And then the significant downside is when several of those key assumptions change at the same time, because that's when usually there is that pressure that is created. Liz, how do you think about the scenario planning?
Yeah, no, I think I agree 100% is just if that government funding does get pulled, what does that mean for the program? So looking at, what does that revenue stream look like compared to the rest of the funding that you are receiving compared to maybe state grants, city grants, and federal grants? Is it the federal that's more at risk compared to some of those state fundings? And if it is pulled, thinking about, can some of that staff be still used and retained for other programs and you're just moving them to another program so that way you're not completely, reducing your staff as an organization, or if a specific space is being used for a program, can you repurpose that space for something else within the organization? So thinking about that, at least, you're committed to it, but how can we repurpose it? Are there other funders who are willing to step in and kind of help you fill in that gap for some of that funding? We've seen it last year where there were some government fundings pooled and there were foundations that stepped up and were able to kind of fill in that gap. So making sure that you have folks that maybe you could tap and say, is this something you would be able to help the organization through?
And maybe if I'm going to jump in and give one sort of final tip on this, scenario planning, I think, and we've touched on this as well, just having alignment between management and the board before difficult decisions have to be made is so helpful. So if you're doing your strategic plan and you have it aligned with your financial modeling and you're having that up front, that's your directional scenario planning, then management and the board have the headspace, the mental headspace to tackle some of those challenges because neither group has all the answers. We really do need healthy collaboration between management and the board, staff being closest to the day-to-day realities, and then boards bringing that independent perspective and strategic oversight. And so I think scenario planning does work best when those perspectives are come together. And it might require adjustment in the governance process. So we typically have our finance committee serving as overseeing or reviewing those scenario plans and the financial modeling. But if there's something that's going off course, maybe there's an opportunity to have a smaller temporary task force to dive into those details. You can bring in different members of the management team at the organization as well. So I know we are at time, so I wanted to take a moment just to thank everyone and all our panelists for joining us today. Our organizations may not be able to control uncertainty, but we can certainly control how prepared we are to respond to it. And I do appreciate that every panelist brought some perspectives to this conversation today to tee us up. Resilience doesn't happen by accidents. It really comes through building strong foundations and creating organizational capacity, staying informed and making decisions early. If you have any follow-up questions, please continue to reach out because we do want to be a resource to you. And this was already put in the chat, but you will receive a follow-up email in the next few days with a recording of today's webinar. And thank you again for joining us and enjoy the rest of the afternoon.